And joining me for the day's markets analysis is Cobus Potgieter from Southern Cross Capital. Cobus, thanks so much for your time this afternoon. And I guess market focus slightly shifting today with U.S. jobs data in focus. The March print will, of course, include the mass firings of the public sector workers that were cut due to the cutting of spending in the federal government. We also have, the tariff risks that could have made businesses reluctant to hire as well. Just your expectations. Do you expect to see a slowdown in hiring? Do you also expect to see an impact in the unemployment rate?
These non-farm payrolls are infamously difficult to forecast, as you'll find that economists that are far more qualified than myself always put up their estimates, and they always seem to miss the mark. And there's a lot of seasonality adjustments as well, sort of discoloring the picture when one is trying to make a forecast. But ultimately, the market is expecting a slowdown. I suppose so am I. Largely in anticipation of those cuts being reflected. We don't know precisely what those numbers are, and the Department of Government Efficiency is not very good at disclosing actual real numbers. So that's a tough call. But more generally, we've seen a little bit of a slowdown in the U.S. labor market, which is reflected in the expectation for non-farm payrolls to go from 151,000 to 240,000 at 2:30 this afternoon.
Let's take a closer look at, the sell-off that we've been seeing. It is continuing into trade today as investors assess the impact, of course, of the latest round of tariffs and what impact that could have on the inflation picture and the growth picture. Those tech stocks, Cobus, being hit really hard. The Nasdaq losing close to 6%. Does this present a buying opportunity? I mean, those tech stocks have really been selling off this year. We know what happened when we saw the emergence of DeepSeek, and now we have, the tariff story playing out with players like Apple and Nvidia under pressure because they have production hubs, or rather Apple having a production hub in China and Nvidia relying on TSMC.
Yes, and it's far more complex than that, to be clear. Apple, perhaps unique amongst these US tech companies, is an enormous exporter. And because of the reciprocity, the retaliatory tariffs we're now expecting from both China and the EU, amongst others, of course, that hurts Apple because they export their product or manufacture their product in that market. But ultimately, they are bringing either finished product or components into these markets, which will now be subject to tariffs. So there are sort of a lot of unintended consequences. On top of everything else, I think yesterday the market was really scrambling, as you mentioned, to understand these tariffs, and there was a lot of focus on the fallout. And did any of us notice that Microsoft announced that they were scaling back the rollout of their data centers? So this is the company that is investing most heavily in AI generation capacity. These data centers are located globally in jurisdictions typically with cheap labor and cheap energy, and essentially used for the actual compute, decentralized compute for these AI models. And that is what has been driving the phenomenal NVIDIA numbers, because they are purchasing GPUs from NVIDIA hand over fist. And this is the first indication we've seen of any kind of a slowdown. They refer to it as a pause in the rollout of these facilities, which affected a number, I think 8 facilities globally. So that's sort of additional fuel to the fire for AI. But ultimately, that might just be a pause. It might not be a change in direction. I'm not saying the AI bubble is bursting or anything like that. At this moment, the market is far more concerned around the tariffs and the reciprocity of tariffs. I know that's a term that Trump uses, but ultimately that is the same threat that they are now facing. The other more world market participants cannot stand unlike us, who have taken a conciliatory tone and are trying to negotiate, the larger markets cannot afford to do that, because ultimately, if you get bullied now, you'll just get bullied again down the line. And it's hard to say whether or not these tariffs, as they stand, they are devastating. But the market doesn't know if they will stand. The market doesn't know if this is a negotiating tactic. Is this once again the art of the deal? Is this my starting point and I'm trying to negotiate hard? Trump has indicated this morning that he is open to phenomenal offers, and every world leader has given him a call since the announcement yesterday. So clearly they are looking to negotiate, but how hard a line they're going to take and how devastating it's ultimately going to be for the world economy and global trade is yet to be seen. And just adding to that reciprocity, just to grant context to why this is such a problem and why these other parties also actually have substantial negotiating power. Trump is fixated on, call it the secondary economy and the primary, because he's putting tariffs on manufactured goods and on primary goods. So with some exceptions, you're talking agriculture, which hurts us a lot because we export a lot of fruit and things like wine to the US. And finished goods like automotive products and vehicles, but conveniently hasn't focused on services. Part of the reason the US is such a phenomenal economy is they're not strong in primary or secondary. They are strong in tertiary. They are strong in services. They import all of this stuff, which fuels their highly educated, highly efficient, technology-driven economy to provide services to the rest of the world. And they've got Facebook, they've got Google, they've got all of these tech companies, all of these financial companies that are delivering services worldwide. And one of the first things that France suggested yesterday is, hey, we need tariffs on American services. And this infuriates the American government. So, they are the biggest player in the room, which means there is a lot of room for bullying. But ultimately, she can play at this game, and there are no winners. Everybody's a loser in this whatever
This
outcome we see here.
situation.
There are just those
Unfortunately,
that
Cobus, we
lose
have
relatively more and relatively less.
Unfortunately, we have to
Yes.
leave it there, Cobus. Thanks so much for your time and just taking us through what's been playing out in markets. That was Cobus Potgieter from Southern Cross Capital.